Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live at sktrading.live or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hi everyone, I'm Stephen Kalayjian and welcome to the Bull, the Bear, and the Ugly. Well, everything was going great today. The markets were up. There were big sell divergences on the 60-minute time frame on the Qs. And as I said a day or two ago, I said, I wouldn't be long with your money. I said there's gap below the market down to 56.75. Market was just hovering here. Everything was hunky-dory. I went out, I came back. I saw a big sell divergence. As I was just about to say, I would look to short them around the 59.56. They got absolutely cabooshed. S&P futures down over 100. NASDAQ down 300 plus. What happened? Well, the 1 o'clock, the bond auction. And I'm going to read exactly what came out. I'll read this to you here in a second. Let me get this here. Right here. So this is the news that came out. The U.S. Treasury, the U.S. 20-year Treasury bond auction experienced weak demand. That means the auction guys had to buy most of it, right? Leading to a surge in the 20-year bond yield to 5.1%. Are you kidding me? Okay. The auction was described as disastrous or horrible, indicating a lack of buyers from other foreign countries to buy our debt, okay, which force yields at higher rates to actually attract the buyers to buy those bonds, which we use that money to fuel the government to pay for things, right? The spike in yields suggests increasing borrowing costs for the U.S. government, signaling a potential concern about market confidence in the U.S. debt. You kidding me? Okay. The stock market dropped sharply in response, as higher bond yields can make equities less attractive to investors by increasing costs of capital and reducing the relative appeal for riskier assets like stocks. Finished. Okay. You can't have 5.1% yields on a 20-year bond and the market thinks they're going to stay above this level. I'm telling you right now, I said it 2 days ago. It came out of left field, right? Gold up over 33 again, right? And I said, I wouldn't be long with your money. Now, there was a moment when they dropped. I got stopped on a long, but then after that, I took every short. I said, I'm looking for every short possible, except at the end of the day, there was maybe one scalp long. But at the end of the day, there was a really great buy divergence that ran about 20, but right into the moving average, and that dropped. So many patterns to show you here today. I literally have 2 sheets of paper, but I'm really just going to look and focus on what happened from 1 o'clock on. I mean, Avago was trading 336, dropped almost $8. Meta was trading in the high 645, that dropped about 12, maybe 15. Apple got absolutely annihilated. So many of the big time frames, the 30 and the 60-minute time frames, reverse the sell. Tesla finished, reverses. I knew that Tesla at 350, 354. I said this thing is like $60 away from the 10 bar. Microsoft down over 1.4%. Microsoft was trading 458. Got out this morning, 457.5, kabooshed. Everything got kabooshed. This was a kabooshin like you haven't seen in a couple weeks because we've been so complacent up here. But let me tell you something. This is not a good number. The 30 and 60-minute time frames on the spiders and the Qs reversed the sell. The Russell got absolutely obliterated, down over 2.56%, right? 30-minute time frame was setting up right before the news that came out around 1 o'clock. That bond auction was horrific, absolutely horrific. And I'll tell you something, this is not going to bode well. And I'll tell you what I expect for tomorrow in the second segment here. But let me just show you so many. I mean, I don't even know where to begin. I mean, there's so many great patterns here. So let me show you here. First of all, the 30-minute time frame. Let's go to the big time frames here. The 30 and the 60-minute time frames on the underlying ETF. Let me just go to the spiders really quick. So we already knew that the 30 and 60-minute time frames reversed the sell on the S&P futures. And then look at this big drop here at 130. Finally, when it got out and released at the 20-year bond, it had over 5.1%. And then you see this push up here. This is the push up right here. And I'll show you this to you. So the 60 reversed the sell correlating with the 15 and the 5-minute. And you can see I'll put this over here, right here. This is the 15-minute time frame. And here's the 5-minute. So this here, you can see the 15s reversing to sell. Look at this pencil down. Look at this. This is over a $5.50 drop. Okay, on that pencil down. And then this is the first bounce on the 5-minute time frame. This is the push down. This is where I got stuck right here. I got caught a little bit here. I said to look to kick him out, and then got a little long here, dropped a little bit long here, and then got this long here. That rally, got this rally here. This is where I got stuck here. No, it was this one I got stuck on. Had to get out of the position. Okay, bought it again for the bounce. This is the bounce here on the short on the S&P futures. This is the first bounce on the 5-minute time frame. Look at the rising ADX. Look at the negative MACDs. Big selling pressure. Monster short. Monster short. S&P futures were trading the 0607, and then they never look back. And you can see the drop here on the spiders, 587.76. And look at the drop here of about 30 points. When the 5-minute time frame reversed to sell, it pushed up here to 92 on the S&Ps. And I'll show it to you here. I'll go to S&P futures. This is the double red short on the S&P. Here's the 5-minute time frame reversing to sell, correlating with the 30 and the 60. The ADXs are rising on the 15, 30, and the hourly. I couldn't even speak fast enough. I was looking to short these at 93. The high, here it is, 93. Actually, I'm sorry, 94 and a half. The high was 93 and a quarter. Kabooshed. Look at that. A drop of over 16 points. But then we got them. We got them right here on this push up on the S&Ps. I was 88 and a half up to 96 and a half range on the short. This is the first bounce on the 5-minute time frame after the 5 correlated with the 15. Look at the ADX is rising here. This is an absolute Picasso. It never looked back. Boom, kabooshed. Look at that. It dropped from 92 and a quarter. I'm not saying you caught the whole move, all right, but it was a great kabooshin. Then here, I caught the long right on the lows because the MACDs were non-confirming on the 3-minute time frame right here. You can see the lows right here. We're not confirming. And then we called a really great short right here towards the end of the day, right above the 74 and a half, 71 and a half, 75 and a half range. And look what they did. They got absolutely kabooshed. When you have these ADXs rising on the 15, 30, and 60-minute time frame, not only just on the index futures, but look at the spiders. Look at the spiders. Look at the rising ADX. The MACD's negative on the 15. Let's look at the 30-minute right here. The 30-minute ADXs are rising. Big selling pressure. All right. Look at the 60-minute. MACD negative. Rising ADX. You got to short the 5-minute bounce on the. It's a set strategy. Look at that. 584.62. Kabooshed right there. Dropped 15 points, 20 points on the S&P futures. A monster day here. Monster day. S&P futures, I literally walked out. I had to go, come back, take care of something. I come back around a little after 1. S&P futures are trading 59.56. I said to myself, what a crazy, look at this. You have non-confirmations on the 5-minute time frame right here. The guy who bought this pattern right here, 59.56 and a quarter, he jumped. Look at this. You're making new highs here, and the MACDs could not confirm the high. Now, I'm not saying I would have caught a 100-handle drop, but I knew that pattern was the MACDs are above the pivot. You're making on the 15, 30, and hourly, and when you make when you're making new highs and the MACDs on the 5 are non-confirming with an overbought condition, you let them have them. Now, granted, even if you caught it here or here, this was still a good drop of about anywhere from 8 to 20 points on the S&P, but then it just kept on going down. This is an absolute caboose right here, right? Within from 1250, 59.56 to, look at this, all right? You're talking from 1250 all the way down to 135, 45 minutes. The S&P futures were trading 58.67, down about almost 89 points on the S&P. Then pushed up into the negative MACD. You got a better chance of meeting the Pope. Look at this. Where are you going on this overbought condition into this negative MACD on the 15 and the 5 and on the 30 and 60-minute time frames? Then the 5-minute time frame reverses to sell. You're short. This is the push up. I'm sick to my stomach. It dropped like literally 20 points on the S&P. Then you caught the nice short here, caught the long here, and then caught the short here at the end of the day. Monster patterns here. Monster patterns. Again, I said to you a day or two ago, I wouldn't be long with your money. I say to let them have them. I was so bearish, not just because of the distance from the price to the 10-bar moving average on the daily. I told you about that big gap. We were floating up here like a 747, all right, without fuel. I told you there was a monster gap there. This is not sustainable. This reminds me of what happened in Palantir about 3 months ago when I called that exit long and shorts above the 125 level. I said the first stop in Palantir was 105. People thought I was crazy. We hit 105 about 4 or 5 days after I mentioned it. Got absolutely cabooshed. All right. Netflix, big sell divergences here, making new highs. But let me show you the 60-minute time frame on the QQQs. When I was walking in here and I saw the 60-minute time frames on the Qs printing 523, I said to myself, are you crazy? Look at this. You're making new highs here. Non-confirmation. I mean, this is insane what I was seeing. Overbought into the negative MACD, making new highs, non-confirmation. You had two monster sell divergences in a positive trend. You're making new highs. The MACD's non-confirmation. You're getting a push up on the 60-minute time frame into the negative MACDs. Let them have them. I actually called a short on that one, if I'm not mistaken. I was actually short that there. But I'm not going to deny it on the drop. I did get stopped on the longs, but then reversed and look for every bounce to get short except for one scalp long and then the buy divergence long at the 330, looking for the push up. Perfect pattern, ran 20 and then dropped about 20 as well. So, listen, nobody's ever perfect, right? But able to adjust, see everything, and then that's it. All right. But the 60-minute time frame. Look at Netflix here. Same type of pattern on the 60-minute time frame. Whoever bought the 1210 in Netflix, he jumped. Look at this, 1211. You're making new highs. These MACDs are non-confirming here on a 60-minute time frame. Monster shorts here. Monster. All right. Monster. Look at HIMS this morning. HIMS. All right. Pushing up here to new highs. This 10:30 morning, 63.20. Where are you going? Look at these negative MACDs, not only on the 15, on the 60, but look at the 30-minute time frame. Look at this HIMS here today, 63.20. We shorted HIMS beautifully. We had what's called a sell disconnect on the, let me see the 15. It was a buy disconnect, if I'm not mistaken. No, let me see here. It was a sell disconnect on HIMS right here, 63.20. The 30 and the 15-minute time frames were negative. You can see the push up here on HIMS. We had a banner day in HIMS. Beautiful. And then when the 60-minute time frame reversed to sell, correlating with the 30, what do you look to do? You short the first bounce on the 5 and the second bounce on the 15 right here, 59, and you can see where HIMS is going. HIMS is down here. Look at the daily. The daily's about to roll over here. You're still 6 points from the 10-bar moving average. I'm telling you, I think the stock is going down. All right. I think the stock is still going down, and there's some movement here. NVIDIA reversed to sell here on the 30 and 60-minute time frame. Here's the 60. And what do? When a 60-minute time frame reverses sell, it correlates with the 15 and the 30-minute time frame. You short the first bounce. This 140 pattern was a Picasso. This 140 pattern really, really kicked in monster patterns here. 133.45, kabooshed. Okay, look at this, 133.45. You can see the drop here of about $1.60. Everything lined up beautifully. Everything was set up perfectly on the 140 pattern. The shorts, Microsoft, monster short. Microsoft was trading 584, dropped down to 454. Jesus, come on. 454 and change, 454 and a half, 454.40, got down to 452.20. The Russell dropped north of $1.50. NVIDIA, Avago on that pattern went from 230 and a half down to 228 and a half. Everything lined up on that 140 pattern. S&P futures, the Qs were trading above the 515 level. I said I'd let them have them. Beautiful. Look at this pattern. Again, this is a monster short here, right here on the 140 pattern. Right here, we were shorting the Qs above 516. I apologize. Boom, kabooshed. Never look back. Look at this. Beautiful. First bounce on the 5-minute time frame. After the 60-minute time frame, reversed to sell. I leave the 60 up for a reason. Look at that. Beautiful, beautiful short. Tesla caught a great short. The 30 and 60-minute time frames reversed to sell. Here's the bounce on Tesla right here. After the 60 reversed to sell. Here's the first bounce. This is the same time frame, the 140. And then look at the bounce here again around the 145 level. Again, the 15, the 30, and the 60-minute time frames were negative. Great short here in Tesla. Everything lined up beautifully between the 140, 145. Tesla 338 and never look back. And then here again, the 5-minute time frame reversing to sell, correlating with the 15, 30, and hourly. At the end of the day, got some crazy push up here, and you can see it got kabooshed about more than $2 here. Let's see, Palantir, really great short, reverse to sell on the 60-minute time frame. Right here, you can see the ADXs are rising. 1030. What do you look to do? You short the first bounce on the 5, but look at these bounces on the 15. Beautiful. Look at this first one right here above the 123. I think this was it, 123 and a half. We were shorting it right there. Palantir never looked back, dropped over $4. Google was absolutely insane today, but when Google reversed to sell on the 15-minute time frame and it reversed to sell on the 30-minute time frame, okay, right here, you can see that whoever bought Google on the highs, 173.14, he jumped. When Google reversed to sell on the 15, there was an 85% chance that the highs are in. But when Google reversed to sell on the 30-minute, the odds are that not probably about 100% that the highs are in for the day, because Google now goes into what's called a sell disconnect. The 30 and the 15 go into sell mode, and absolutely beautiful patterns there on Google that gave you the sell divergence there. All right. What else? Let's look at SMCI. Here's another great one. The 60-minute time frame. You can see the 60-minute time frame on SMCI pushed up to new highs here, and you can see the overbought condition right here. This was earlier. This was around 1230 above the. I think we shorted this above 44 at one point. And we did not catch the $2 move, but we did catch some of it. All right, but overbought into the negative MACDs, and then you can see when the 15 reversed to sell right here on SMCI at 130. Then you look to short the bounces here, and exactly everything lined up between the 240 and the 245 time period. And you can see the big drop of north of about $1 here on SMCI. The Russell, the IWMs really started the whole pattern here today on the 60-minute time frame, reversing at 10:30 in the morning. So somebody must have known something, because this was the first time that the Russell reversed to sell on the 60-minute time frame. This was the first ETF of the four, the IWM, the diamonds, the spiders, and the Qs. So the 60-minute reversed to sell, and then it correlated with the 30 and the 15-minute time frame. And then what do you look to do? You short the first bounce on the 15. Well, let's see. There was a push up here. Really, the ADXs are rising on the 15, 30, and hourly. And then what you look to do, you short all the balances on the 5-minute time frame. Here's a 5-minute time frame. Well, let's see here. 10:30. This was the first short right here. Actually, this was the short, one of the first shorts right here at 12:55. Since the 60 reversed to sell. Here's the other short that we talked about, the 140, 145. The 5 reverses to sell, and here it is, the 240 time period, 204.30. Never look back on the Russell. Again, mirroring the S&Ps. Here's the buy divergence, making the new low. MACDs didn't confirm. We rallied and then got the great short at the end of the day. So you can see how these patterns repeat themselves over and over. Great pattern on gold, on the GLDs off the 15-minute time frame, but I'll show you that. Great patterns on MSTR today. Coinbase really pushed up here. I'll show you Coinbase. I got to tell you, when you see Coinbase trading 269, a good friend of mine called me and said, what do you think of Coinbase? I said, I wouldn't own it. I would be shorting it. And guess what he did? He shorted it, right? Let me show you Coinbase here on the bigger time frames. Again, if you can master the art of divergences, you've mastered the art of trading. I mean, come on. Look at this here. All right. Coinbase cannot make a new high. If you look at the MACD here, it made a new high here, 260, 270. Oh my God, at 1 o'clock. I thought it was 269, 270 and change. Coinbase making new highs. The 30-minute MACD is non-confirming. Where the hell are you going with this 60-minute time frame? You're making new highs on Coinbase. My friend calls me up. He said, what do you think of Coinbase? Long? I said, I wouldn't own this. Not with that pattern. And then on top of that, look at the daily. Look at the daily. When Coinbase was trading 270, we were $41 away from the 10-bar moving average. Like I said to you, I wouldn't be long with your money. What are you, crazy? Unbelievable. Unbelievable. What a short. I mean, look at this pattern on the sell divergences off the 60-minute time frame. I told you all my strategies are based upon divergence patterns. If you could really get a great handle on learning the divergence patterns, you have mastered the art of trading. All right. Last one here. I'm going to show you two, actually. SDSs. I look at the SDSs for confirmation. Look at this. ADXs are rising on the 60, 15, and 30-minute time frames. All right. Look at the first pullback here on the 5-minute time frame. I'm not trading the SDSs. I'm shorting the indexes, the ETFs, and the whole world on this pattern. This is a pattern where you'll hear me say, I'd short the whole world. Okay. I short the whole world. Because this pattern with the ADXs rising on the 15, the 30, and the 60, the big buying pressure, the algo reverse to buy on the 60, you buy the first pullback on the 5-minute time frame. And that's when the S&P futures, we were shorting 97.5 to 07.5. They got up to 07.5 beautifully. And then literally, I probably should have waited. I knew they were going to rally above even. So, but I wanted to get in, and people really cleaned up, went to 07.5, and then they absolutely got kabooshed. For the SDSs to rally from here, okay, the S&P futures dropped north of 30 points, roughly 25 to 30 points on that pattern. So that's why I look at the underlying ETF like the SDSs for confirmation. When you see these rising ADXs like this, and you see the 5-minute time frame correlating with the 15, just like the inverse on the spiders here. I mean, this is everything lined up beautifully here. I mean, you can't ask for a better pattern on the 5-minute double red right here, and here's the short at 140. Right into, or this is, look at this monster bear flag. Bull flag on SDSs, bear flag on the spiders, major short here, and look at the caboose we got. beautiful pattern. First bounce on the 5, after the 5 correlated with the 15, 30, and 60-minute time frame. This is an absolute caboose, okay, at the 140 time frame. Absolutely. You need to really understand the vital importance of how these patterns repeat themselves. Last one before I get into segment 2 here tonight. Look at the GLDs. Gold's on the tear. All right. We'll look at you can see the trend. The MACD positive, ADX rising under 60. Let's look at the 30. Okay. 30, beautiful, still rising, right? Look at the pattern on the 15-minute time frame. This is the pullback on the 15 on the GLDs. Look at this. An absolute Picasso, 304.37 right there. Boom. Gold rallied $10 and never looked back and ran another 10. So basically off that pattern, okay, and this is actually the 30-minute and the 15 set up at the same time, but you can see the 15 got oversold into a rising ADX on the 30 and the 60-minute time frame. The difference is the MACD is negative here on the 30, where the MACD is positive on the 60. Look at the buying pressure. Look at the yellow dots. Nowhere near looking like it's going to go negative on the 30 or 60. Monster pattern on the gold futures. Again, on the GLDs. And if you look at gold, you can see obviously that gold, what time is that? 1 o'clock when that happened. Like they knew, somebody knew about this was going to come out. You can see here the 30 reversed to sell. We're going to get another push up here, but this was the pullback at 1 o'clock on the gold. Gold was trading below the 33.05 level and immediately shut up right there at 13 points and never looked back here again. All right. When I get back, I hope this really helps you understand how these patterns repeat themselves based upon the conditions that I set, being able to identify using indicator 4 on my 3 time frames. And again, I hope that this really can register with you and understand and give you the confidence to be able to trade each and every day and be consistent. All right. Like I said, all right. So when I get back, I'll tell you what I expect for tomorrow. All right. So for tomorrow, we're deeply oversold here on the 30 and 60-minute time frames, and I'll show it to you. So for tomorrow, I am looking for some type of a bounce tomorrow off these 30-minute time frames, 15s and 30s. The ADXs are still strong, but I expect even if we get a 25, 30 handle rally on the S&Ps, I say I would let them have them. I do think that with the 60-minute time frames reversing here, 589.69, the S&Ps have to rally 70 points. Okay, that means they have to rally above the 59.30 just to get the 60-minute time frame to reverse the buy. There's no economic number coming out except existing home sales tomorrow. So that's not a number that's going to move the market 70 points. Right now, I think the market is spooked by the bonds and the 20-year bond at over 5%. Not something we've seen in a long time. You had to raise the yield in order to attract buyers. Not a good sign here. Again, I think we're getting for a tough summer. I think we drift lower. I don't think we go straight down, but I think the rally tomorrow, if we get one, will be short. If we do get a push down to new lows, probably with these deep oversold conditions here, probably look to take some scalp longs and then look for a nice pattern into those negative MACDs to look for shorts off the 30 and 60-minute time frames. Again, 10 o'clock number, existing home sales, no numbers really. Oh, and you have the jobless claims number tomorrow as well at 8:30. And then Friday, we have new home sales. So really, that's it. No really big numbers for the rest of the week. Just the 2 10 o'clock numbers, existing home sales tomorrow and new home sales on Friday. So that's what I'm looking for. Any big push down tomorrow? If we get to real single deep oversold conditions, deep single digits like 1, 2, maybe I look for scalp longs. But ultimately, I'm looking for a push up tomorrow and look for the shorts off of the 30 and or 60-minute time frames on any overbought condition. All right, when I get back, I want to tell you how there's more than one way to skin a cat. Okay, so many people have come to me from all around and say to me, Steve, I'm trading my own money. There are people who trade prop money, prop accounts, like these funded accounts, like the Legends Trading or other ones, Mint or other names, Top Step or whatever. But I got to tell you honestly, though, I have people who are trading stocks, ETF, options, so many people, commodity futures, index futures, um, crypto. So many people are trading crypto now. So, one of the things I will tell you, just to be bluntly honest with you, is the ability to understand that if you're going to trade your own money, and especially if you're going to trade index futures or commodity futures, you may want to think of doing a prop firm, right? Because I have so many people who trade prop, right? And what they do is they stop, they hit their goal, they may have more than one account, and then they get, if they make $300 with 5 accounts, they make $1,500. I have so many people who I brought this to their attention who just say, I never even knew about this. I'm like, yeah, if you don't want to trade your own money, you can trade a prop, but you have to pass the evaluation and and stay consistent, which is important. I have a lot of people who traded their own money, who then, once they hit their goal for the day, they switch to a prop. I have people who trade equities or ETFs and potentially will do a funded account for stocks and or futures. It doesn't make a difference. The bottom line is that there's a lot of vehicles outside of trading your own money to be able to do very well. As long as you just stay consistent, trade the right patterns, and mostly just go for singles and doubles. No home runs here. All right. Thank you for joining me tonight. I'm Stephen Kalayjian. Thank you for joining me here on The Bull, the Bear, and the Ugly. I will see you tomorrow. Please subscribe to my YouTube channel here. Please leave a comment. I'll be here tonight, and I always reply back to people. Also, thank you. Please join my community of traders from all around at sktrading.live. I'd love to see you. I'd love to be able to teach you at this stage in my life. Please follow me on social media at official Stephen Kalayjian X, Instagram, and on TikTok. Also, if you need to text me, my cell phone number is 914-500-7484. Have a great night, everybody. Enjoy. I'm going out to this 85, 90-degree weather here in Jupiter, Florida. I love it. Have a great night. Enjoy your family. God bless you, and God bless the United States of America. Be well.
Thanks for tuning in to The Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.